Artificial intelligence. It's the buzzword of the decade, promising to revolutionize everything from healthcare to transportation. And at the heart of this revolution sits one company, Nvidia. For the past few years, Nvidia has been the undisputed king of AI chips, the essential components powering these groundbreaking technologies. Their stock price has skyrocketed, making them the first chip maker to hit a staggering $4 trillion market value. But is this growth sustainable? Are we witnessing a genuine technological leap, or are we in the midst of an AI bubble ready to pop? This week, Nvidia released its latest quarterly earnings, and the results were complicated. While profits and overall revenue still beat expectations, the growth in their crucial data center division, the one fueled by AI chip sales, showed signs of slowing. Revenue increased significantly year over year. Nvidia's data center revenue declined 1% from the previous quarter. That's a red flag. Analysts are starting to wonder if the massive spending on AI infrastructure can really continue at this pace. Are companies getting the returns they expected from their AI investments? Or are they starting to realize that the hype might be exceeding the reality? Adding another layer of complexity is China. The US-China trade war has cast a long shadow over Nvidia. Initially, restrictions on exporting high-end AI chips to China threatened to cripple Nvidia's growth. Then, in a surprising move, the Trump administration struck a deal. Nvidia could sell a modified, less powerful chip, the H20, to China, but the US government would take a 15% cut of the revenue. Sounds like a win-win, right? Not so fast. Beijing responded by expressing national security concerns about Nvidia chips and urging Chinese businesses to rely on local semiconductor suppliers instead. And now Nvidia is projecting no sales from H20 in the current quarter. The China market, once a huge opportunity, is now a major question mark. The situation is starting to remind some experts of the dot-com bubble of the late 1990s. Back then, internet companies with little to no actual revenue saw their stock prices soar to unsustainable heights, fueled by speculation and hype. When the bubble burst, trillions of dollars were wiped out, and many companies disappeared overnight. Is AI heading down the same path? Are investors blindly throwing money at anything with AI in its name, without considering the underlying fundamentals? Sam Altman, the CEO of OpenAI, has even compared the current situation to the dot-com era, and when the creator of ChatGPT is raising concerns, it's time to pay attention. However, it's important to consider the bull case. AI truly could be a transformative technology, on par with the internet or the Industrial Revolution. It has the potential to solve some of humanity's biggest challenges, from climate change to disease, and Nvidia, despite its recent setbacks, is still incredibly well positioned to profit from this revolution. The company's executives point out that trillions of dollars will be spent on AI in the coming years, and they expect to capture a significant share of that market. Furthermore, the restrictions imposed by the US government will likely spur innovation in China, leading to the creation of competitive local alternatives and an overall acceleration of AI development. So, how do we know whether the AI boom is sustainable or a bubble about to burst? Here are a few key indicators to watch. First, keep an eye on Nvidia's future earnings reports. Will they be able to reignite growth in their data center division? Second, monitor the adoption rates of AI across different industries. Are companies actually integrating AI into their operations in a meaningful way, or is it just a marketing gimmick? Third, pay attention to the development of AI in China. Can they overcome the challenges posed by US restrictions and create a thriving domestic AI industry? And finally, watch the overall market sentiment. Are investors still enthusiastic about AI, or are they starting to become more cautious? The AI race is not just about technology and economics. It also has significant geopolitical implications. The country that dominates AI will have a major advantage in areas like military technology, cybersecurity, and economic competitiveness. The US and China are locked in a fierce battle for AI supremacy, and the outcome of this competition will shape the world order for decades to come. Trump's deal with Nvidia is one example of this geopolitical struggle, a way to attempt to extract revenue from China's technological advancement. The ability to design and manufacture advanced AI chips is a strategic asset, and both countries are doing everything they can to gain an edge. For investors, the age of AI presents both tremendous opportunities and significant risks. It's crucial to do your homework, understand the underlying technology, and avoid getting caught up in the hype. Don't blindly invest in companies just because they claim to be involved in AI. Look for companies with strong fundamentals, a clear competitive advantage, and a proven track record of innovation. And most importantly, be prepared for volatility. The AI market is still in its early stages, and there will be plenty of ups and downs along the way. The future of AI is uncertain. Whether it is a bubble waiting to burst or the dawn of a new era remains to be seen. But one thing is clear: AI is a technology that will profoundly impact our lives, our economy, and our world. And while there may be risks involved, the potential rewards are simply too great to ignore. So buckle up, do your research, and get ready for the ride. The AI revolution is just getting started.